This is an exclusive interview. We told you about it before, so hope you're ready. Now, recently, the executive board of the International Monetary Fund, IMF, concluded the Article 4 consultation with Nigeria. And here's what happened. They made economic recommendations, right? And this was to the federal government. And if taken, it will shape our future. Now, our guest is a dapper-looking gentleman, Christian Ebeke. All right, he's the IMF resident representative for Nigeria. Good morning to you, sir.
Good morning. Thanks for having me.
Yes, you're welcome. Good to see you. We've got a conversation from Lagos as well that we're going to have. Bukola is in Lagos, is the presenter of the Classic Monitor in Lagos, because we want to have a robust conversation. So she's also listening. But let me start by saying, with the continued monetary tightening, inflation is projected to gradually decline to 24% year on year at the end of this year. But the Naira is still experiencing a rise and decline. I want to ask, for Nigeria, how would you describe our current economic situation?
Thank you. This is a very important question that you're asking. And I think everyone is feeling the current economic situation.
Right.
And there is no doubt that there is a lot of pain for Nigerians currently, as you mentioned.
Right.
Inflation is 40%. Food inflation, so is 40%.
Mm-hmm.
Overall inflation is above 30%. And food insecurity is a big risk right now. You see that in several parts of the country. So it's an economy that is still adjusting to the challenging and bold reforms taken by the administration. But you also have to remember the starting point. The starting point was that the administration inherited significant challenges when they came into power. Inflation was already trending upward. Foreign exchange pressures were intensifying. And you also have an administration that inherited a very low revenue collection. The taxes that the administration collects were pretty low, 9% of GDP last year, which is one of the lowest tax to GDP ratio in the world. So challenging reforms were implemented. Now it's very, very important to bring also a social agenda to these reforms.
Okay.
Making sure that people can receive direct support from the government. That's why we are very pleased to see that payment to vulnerable household, 50 household is being implemented, and we hope that this can be accepted.
All right, we'll get back to that. But Bukola is here, and Bukola, good morning. Can you hear me? I'm doing fantastic. Christian is here with us as well, the representative of IMF.
I'm doing well, thank you.
That's Bukola from Lagos.
Recommendation in your IMF Article 4 consultation, it talks about the fact that the government will reduce welfare, so both agriculture output and that federal I want to know how I should be able to actually allocate the tax to all the citizens at this point in time.
All right. Thank you very much for your question. I think you have to take into account the fact that the recommendations that we are proposing are both for the near-term issues, which are macroeconomic stability, but also medium-term issues that you mentioned, right? Diversification of the economy, reducing all theft, making sure that the economy is more resilient to climate shock. These are also medium-term policies. So in terms of recommendation in the near term, we are confident that as the administration, the central bank also, they are all embarking on restoring macroeconomic stability. What do I mean by that? The central bank is aggressively focusing on reducing inflation, bringing inflation down. That's why they have tightened monetary policy by 600 basis points since February. They are mopping up liquidity. They are issuing securities to make sure that they can attract foreign capital into the Nigeria autonomous foreign exchange market. The Naira is still adjusting to these important reforms, but clearly the mandate is to move away from a central bank that was busy doing quasi-fiscal activity. They were financing the deficit directly, which is not a practice that you see in modern central banks in the world. But now there is a clear path towards really refocusing the mandate on price stability. You also have the fiscal policy that in the near term, as I mentioned, can be focused on addressing the food insecurity that is prevailing in the country, making sure that those who cannot cope with the reform that are being implemented now can receive help from the federal government. this scheme sponsored by the World Bank and the Finance Ministry is really, really key. Accelerating those payments directly into the wallets of people who are in dear need is very, very important to restore confidence, but also carry the population along as you're moving on with the reforms. And then you have the medium term reform, those reforms that take a little bit more time, right? On the revenue side, you see the work that the Presidential Committee on Tax, on Fiscal Policy and Tax Revenue is doing. They are thinking about revamping the major tax laws in the country, but they're trying to do that in a more inclusive manner, making sure that different stakeholders are part of the conversation. They are not necessarily thinking about increasing the tax rates now, but making sure that compliance is back and that Nigerians who can afford to pay or who need to pay will pay the taxes. But then you have, and then I'm just going to end there, you also have the issue of long-term growth. Nigeria needs to grow. Right now, GDP growth is just on par with population growth, so it means that GDP per capita is not really, really impressive. So Nigeria needs to grow, and that's why in the report we're insisting on structural reforms in many, many areas, including the oil sector.
All right, all right. And Christian, the IMF advised the federal government to remove petrol and electricity subsidies once the social protection scheme has been enhanced and inflation subsides. Now, how would you say this removal of subsidies has affected our Nigerian economy?
Very good. The removal of subsidies last year was an important decision taken by the administration. We know that in many countries, this is a very, very challenging policy decision to take, right? Because subsidies could have the removal of subsidy could increase prices across the board because fuel and diesel are very, very key in many aspects of the economic life. So this removal of subsidy was a bold but difficult reforms. It was unpopular, I can say, because in many countries this has never been popular, but it was necessary.
Okay.
It was necessary because subsidies is not just fuel. You also have electricity subsidies.
That's right.
Both subsidies this year, our estimates show that they can move to 3% of GDP. 3% of GDP this year just are foregone revenues because in the system we still have these prices of fuel but also electricity that are below the supply cost of producing or acquiring this product. So in a nutshell, we have this 3% of GDP in the system. These represent, based on last year's revenue, 1/3 of what Nigeria collected in terms of tax revenue. So these are foregone revenue of big size. So what we are recommending is clearly you have to think about phasing out these subsidies. But before you do that, you have to take into account the social context now. It's very difficult to implement this phasing out of the subsidy, meaning increasing pump prices when inflation is already above 30% and food inflation is 40%. So what we're recommending is strengthen the social protection system first.
Okay.
Support the most vulnerable first. Before then, when it's delivering, before you can now phase out the difficult subsidies, electricity and fuel. But the economic impact of this has been difficult for many Nigerians. There is a lot of pain for Nigerians. You can see that every single day. There is a statistic that I keep mentioning, which is produced by the Nigerian Bureau for Statistics, which is the average cost of a daily diet, of a healthy diet, the average cost of a daily healthy diet. This is a statistic that is clearly showing how costly just having a healthy meal every day, how costly this has become. And the focus on restoring price stability, the focus on making sure that the Naira finds its appropriate level that is more stable, that the market is functioning well, but also coordinating policies between monetary policy, fiscal policy, and all other policies in the country will be key in bringing back stability and in restoring confidence.
All right, well said. I'm certainly focused, and I'm wondering how these cash transfers to vulnerable people will be implemented and monitored. However, Bukola, I'm sure you have another question for Christian.
Yes, I do. Ask the recent decision of the NAC as one of the reasons to Nigeria's economic growth. My question is, how can this be tackled ultimately, and do you think there's any hope of the Naira regaining its strength at some point?
Yes, I think this is a good question, and because Nigeria is a country with a flexible currency, it's clear that movements around this currency impact people every day, and Nigerians are appropriately looking carefully at the naira dynamics to infer the direction of travel right now. What is important to say is that in the report, we are talking about an upside scenario too, a scenario whereby a better packaging of policies. Again, if monetary policy is appropriately fighting inflation, this should be positive for the naira for many reasons. The reason why many Nigerians prefer to hold dollars instead of the naira is because the naira is losing value every single day. Inflation is eating up the value of the naira every day. So when you have an inflation that is 30% or even 20%, this is creating uncertainty and people don't want to hold the currency. So as the central bank is tackling inflation, this is positive for the naira as well. But again, as the naira, the central bank is also and the MPC are tightening financial conditions, are raising interest rate. This is attracting capital inflows, right? Since the beginning of the year, thanks to the tightening and the reforms in the FX market, Nigeria has received in terms of foreign portfolio investment $3 billion. This
Wow.
has helped to liquefy the FX market and to create a little bit more stability in that market. At the same time, fiscal policy also has a role to play in helping to stabilize the naira. You know, the what I mentioned earlier, the practice that has been here in many years, the practice of financing the deficit by the central bank is not a practice that is part of the agenda of many central banks or around the world. So making sure that fiscal policy continues to focus clearly on revenue mobilization, making sure that there is a clear implementation of the current plan of raising more revenue, streamlining the taxes. This will help reduce also money supply in the economy, and this will make sure that we have a coherent fiscal and monetary policy duo that is really helping to bring back macro stability. The future or the dynamic of the naira will clearly depend on a coordination between fiscal and monetary policy, but also structural reform to better attract longer term capital flows into Nigeria. Foreign portfolio investment are not the only source of funding the financial account in Nigeria. Nigeria also needs longer term, more growth friendly form of capitals, including remittances that Nigeria always send back home.
All right, all right. Interesting conversation, and I can see that there is concern, IMF's concern about Nigeria's current situation, and these policies, these meetings, and recommendations are, testament to that. Now, you had talked about federal government needing to raise the supplementary budget to accommodate the proposed minimum wage increase for workers, but it's biting hard. We can see how it's affecting labor. But labor is insisting that it wants the minimum wage pegged at 615,000 naira. Due to the current hardship, do you recommend that it is possible?
What we are pleased to see first is that there is already in Nigeria a framework to revise the minimum wage every 4 to 5 years. So in many other African countries, even this framework does not exist. So here there is a clear framework, there is a timeline to engage into these negotiations.
Okay.
And again, these are negotiations. The workers will appropriately demand higher wages because of the cost of living crisis, which is appropriate given where the situation is.
Right.
And then you have the second stakeholder, which is the business sector, basically the employers. They will also have to figure out how much they can really finance in terms of wage demands. And then you have the federal government, who is also an employer, who is basically helping in the discussion, but is also going to be impacted by any upward adjustment to the minimum wage. Our view is that those negotiations should continue in a very good environment, making sure that both parties are clearly presenting the facts, presenting their position, and we are confident that ultimately a solution will be found. But I want to make a very important point, right?
Right.
Wages, the increase in wages has to be matched gradually by an increase in productivity.
Okay.
In an economy where wages go up faster than productivity, what's going to be the impact? The impact is that it's going to be inflationary.
Okay.
So it's very important to have this packaging again of policies, making sure that any increase in the minimum wage that is granted to households and workers who work very hard every day is also equally matched by an economy that's become more productive in order to sustain any increase in the minimum wage.
All right. Certainly look forward to more of these implementations because things are biting hard, prices are going up. But we see your recommendations, and it's a very interesting conversation that we'll be following for the good of Nigeria, for our advancement. Thank you so much, Christian Ebeke, for speaking with us. He is the IMF President Representative for Nigeria, and this has been an interesting conversation.
Thank you very much for having me again.